Welcome, everyone, to another episode of How to Make Money in Stocks with Investors Business Daily. Now, Amy, it's nice to have you back again.
Thank you. Good to
sort
be
of,
back.
because you're taking off again for
again.
Chicago. So we're actually going to record part of this show earlier on Wednesday.
And I just wanted to say, Matt, I wish I could take you with me out on the show because you're so nice. Our audience, big fan clubs out there.
That's
I
nice.
saw a lot of people at the Money Show. Thank you very much. We gave away a lot of your books.
Oh, that's great.
A lot of people were really
Great.
excited about the books. That was nice. And then met an awful lot of nice people in Minneapolis, too. And I'm looking forward to Chicago. I got to get you out on the road with me.
We'll get it someday.
Okay. All right. Okay.
Now, this week, we're going to talk about some big cap names that you want to keep an eye on because they may be poised to take off when we finally get a better market.
Which we will at some point.
But first, we're going to take a quick look at the market. So once again, this week showed why this continues to be a tough market without a clear sense of direction. The NASDAQ followed the same seesaw action that we've seen a lot of recently. Starting on Friday, May 6th, the NASDAQ rose nicely for 3 days, then fell for 3 days. This week, it whipsawed again, undercutting the prior low before recovering somewhat on Thursday and then moving nicely higher on Friday. One potentially positive factor to watch is how the 50-day line has crossed back above the 200-day line. So see if that holds, since it may mean that the NASDAQ is finding some renewed technical strength. But as we discussed in last week's episode, don't forget that the current bull cycle began way back in 2009. So it would not be surprising to get a sharper correction at some point. And by the way, we apologize for last week's show where we had a little glitch on this very same topic. So that's been fixed, and you can see the full episode now at investors.com/investingshow. Much of the market angst that we saw again this week came from indications that the Fed appears to be more hawkish about short-term interest rates than previously thought. The general consensus had been that the Fed wouldn't hike rates again until December or February, but now the odds are that there will be a hike in July and possibly another one in December. But rather than try and predict what will happen, the most reliable tool for making your investing decisions is the chart. And since the charts for the indexes and many leading stocks are showing mixed signals right now, it's a time to proceed with caution. On the positive side, we have seen some big moves from stocks like chip designer NVIDIA, which has soared higher over the last 2 weeks. And also Salesforce.com, which jumped higher on earnings. We'll talk about Salesforce later in the show in the segment that we recorded earlier in the week. Veeva Systems, which provides cloud-based sales and marketing solutions for the life sciences industry, is an IBD 50 stock that broke out this week ahead of its May 26th earnings report. On a more challenging note, we've seen stocks like Edwards Lifesciences start to pull back. After jumping into that 20 to 25% profit-taking zone, Edwards fell this week and is testing its 10-week line. And look at the volume. It came in 99% higher than normal. That's a good reminder of why you want to at least consider taking some profits if you're lucky enough to get a stock that goes up 20% in this type of market. There are still several IBD 50 stocks setting up in bases, including Chinese online game provider NetEase, Blue Buffalo, and some others. So while it is a challenging market and you want to be picky and manage your risk, do keep an eye out for opportunities and have a specific game plan for taking profits and cutting losses. Not a lot of top growth stocks are reporting next week, but IBD 50 members Ulta Beauty and Veeva Systems are on deck. We'll also get a look at some retailers like Best Buy, Costco, and Dollar General to see if they're holding up better than some of their industry peers. As always, for a quick look at the Investing Action Plan, earnings preview, and week in review columns, visit investors.com/investingshow. So as we wait for a stronger, less volatile uptrend to begin, we want to take a look at a few big cap names that may be getting set up to have a nice run when a good market finally comes along.
Now, Paul Whitfield wrote an article for the Big Cap 20 column, and he talked about the leadership, right? And so we would like to take a look to see if the market does take off again, which stocks might be poised to zoom. So we're going to look for companies that had at least 25% growth in earnings this year, and what we can expect going forward in 2017, those that might have 20% in earnings.
Right, so those are the stocks that we want to take a look at. Based on that criteria, Paul noted a few names. One was Amazon, which is dominating online retail and putting a lot of pressure on traditional retailers, especially Macy's, as we found out last week. Now, the popularity of its Amazon Prime membership and the free shipping that comes with that is locking shoppers into that Amazon ecosystem. And the company has also established itself as clearly the dominant player in the cloud services space.
It's amazing. Now, the stock has risen steadily, or at least it has held nice and steady for the last 6 weeks since its breakout. Now, if we take a look at the earnings, the last 4 quarters of earnings have been in the triple digits. That is up from negative numbers a year prior in those quarters. And sales have been solid the last 4 quarters as well. So Amazon is a company that has definitely attracted the professional buyers.
And one reason, as Paul noted, is that analysts expect Amazon's earnings to rise 327% this year and then another 83% next year. So that certainly makes it one to watch. And another one to keep an eye on is Monster Beverage.
Now, Monster Beverage is another stock that's holding up well in the current market. It's in a cup with handle shaped base that is holding tight, sort of around that pivot. Now, it's had some really nice spikes in volume showing that professional buying, and it has a B+ accumulation distribution rating. Now, as many people are aware, Monster makes a plethora of energy drinks, including the Java Monster, which is the coffee drink. We've got Monster Rehab for hangovers.
It's a great name.
And that includes electrolytes. And we've got the Muscle Monster shakes, got the Uber Monster, you got the Full Throttle. Anyway, you have a myriad of other stimulating beverages. Now, the company is expected to grow revenue at 14% in 2016 and 12% in 2017.
I love how you're talking about these bro culture drinks and using myriad and plethora in the same description. That's fantastic. Now, Monster's partnership with Coke is said to be going well, which is helping Monster expand internationally. And its energy drinks are coming to Australia and New Zealand this month. And Vulcan Materials is another big cap name with some positive trends behind it. It provides concrete and other building materials. And since finding a bottom in January, the stock has been climbing nicely. It's been in various IBD lists during that time, and I covered Vulcan on March 29th, just as it was completing that base. Investors see Vulcan, U.S. Concrete, and others benefiting from the big transportation and infrastructure spending bills that have just been passed.
Now, Salesforce.com is another big cap 20 stock. It's expected to grow earnings 35% in fiscal 2017. It's currently just under the 77.92 buy point, but this consolidation is more V-shaped, and those structures can be more prone to failure. The company provides customer relationship management software.
Okay, now to stay on top of these and other big cap stocks, go to the Stock List tab on investors.com and click IBD Big Cap 20. You'll find both the article and the actual list of the stocks on that next page. To see the chart analysis that alerts you to potential bases and buy points and also possible warning signs, click the ticker of any stock. Then you'll see the analysis under the chart. And you can use these arrows above the chart to go through each name on the list.
Now, the Big Cap 20 is a good list to watch. These are stocks that tend to be, and I say the word tend to be, less volatile since they are more liquid. And certainly by looking at this list, an investor can get a sense of where the money is flowing into these larger cap stocks. That's exactly what we want to figure out, where the money's going.
That's right. Now, but as we noted up front, you also want to watch the general market. It is tough for any stock to make a substantial climb until we have a more solid uptrend.
And keep your eye on the Fed. I will be in Milwaukee and in Boston in June, so be sure to come out and see me, and I look forward to seeing a lot of you, as I always do.
Right, and for all the dates and details on that, just visit investors.com/investing show. And while you're there, check out the notes for this week's episode.
Okay, see you next week, everybody.